We are here. We are here. We are here on this amazing day. Hey everyone, this is Cam Jones, FX Daily Analysis, and we are marking up SLB. Let's take a look at what's going on in the market. We are on a monthly time frame, so we got to tag these areas up. So simple, highest high, lowest low. So we're going to drop a wick down to the bottom, the lowest low area. Midpoint, we're going to gauge the top to the bottom. We have a midpoint, and we can now we got to figure out where price is currently at. Price action last candle is below the midpoint line, so it's on some type of second level lows hanging around that area. Okay, so now let's walk over to that area to see what's going on. And if you look at the overall structure, what the market did, real simple. Market started off at a low, pushed up to the midpoint, consolidated on near that midpoint. Excuse me, I said midpoint. Second level highs consolidated between the midpoint and the second level highs. Broke up. Okay, so broke up, did a double top in this area here, then pushed down. So you gotta figure out what's going on. So trying to read this from this area here, we can clearly see market spiked up. Even though we got a double top here, just think about one spike up to that high, market came back down, did a whole bunch of 1, 2, 3, 4 spikes down to the bottom, maybe about, let's say solid 4 with 2 retests. And then market came back up to that high for the third leg, then pushed down for that fourth leg, and we received about 3 retests in that area. So the double top, 3 retests, market pushed down once, market pushed down twice, market pushed down 3 times. So market did 3 pushes down to that bottom, but that's not, it is not really done. It can still push, it can push down further if it wanted to. If not, market is being respected after the break of this midpoint, or the break, like a double retest, we're gonna push up. So I want to take a look at what's going on near price action and below price action. So let's zoom in. On the monthly time frames, no, so we're looking for structure. So if the market is not going to push down from this 4 pushes, 3 pushes, if it's not going to continue for that 4th push down to the bottom, it turns around. So market's going to be respected for that support area. So we can see that pattern trying to form out for that first leg, second leg, third leg, fourth leg, retest. Market pushed up once, retest, market pushed up twice, retest, market pushed up 3 times. But that's already 3 pushes to the top. That's actually 3 pushes to the top in both directions. 3 pushes down to the bottom, all the way from the high that we found, and 3 pushes from if the market is going to go up. Okay, so basically, market is really in a range of overall pushes, 4 pushes exhaustion. So we're going to see what's going on. Price action candle is above the second last candle, but second last candle is a long wick up to the high, so we want to see price break that wick for it to start breaking, to start pushing up further. But price action body is above the previous body, so it's like a 50% chance. But you can see that market did do a double top at the resistance. Also, if you think about connecting the wicks together, connecting the bodies, market may be consolidating sideways again, some type of doji, or maybe some type of other candle that's similar to a doji before we get the breakout, or the breakout is going to happen now with this active candle on the monthly time frame. Headed down to the weekly time frame to see what's going on. Price action candle is a bullish inverted hammer, so market is working its way up, and we can see what patterns is working its way up. But before we get there, we can see market ran into resistance, about 3 pushes down to that high. Market pushed up once, market pushed up twice, market pushed up 3 times. Wasn't able to break, but as we walk down, we may not identify 3 pushes to the top unless this midpoint wick, unless the second last candle wick is pushed up higher. So we may see 3, but identifying on the daily time frame, it's more look like a double top of that area from the first spike up for the price action candle, the third spike up for the third to last candle in the market. We're gonna see what's going on. So basically, the market is spiked up, came back down, spiked up, and pushed back down because of price at. But if you look at where the overall candle, it's really, the picture is hanging up. It's hanging out at the top of that resistance. Headed down to the daily time frame to see what's going on. So you can see multiple pushes to the top. So let's draw it out. First leg, second leg, third leg, fourth leg, retest. So the market is identifying the third push, the third leg, third to fourth leg on the way up from the double bottom if the market's going to work its way up from that area. Okay. If price is going to drop down, so we see that market's going to tag that resistance for the first, second, third, fourth, retest, one, retest, and the market dropped down. So market's be coming from a triple top. So we got triple bottom. We have so market's in like kind of a perfect range because we got 3 pushes up to that top and 3 pushes to that bottom of that support, which create that consolidation. So if we're looking for a price to break a previous candle, but to see a nice clean breakout, if it's up to the upside, we don't see price action candle break above this SR line. And if we want price to break, say price comes down, we want it to break the 1, 2, 3, 4, fifth the last candle in the market, which is a doji right here, and the market could push down unless we see multiple candles form that looks strong enough that's going to push that market down, and that'll be good to go. Headed down to the 4-hour time frame. Let's see what's going on. 4-hour time frame, so we can see those structures forming in there. I mean, I'm just going to pay attention to the resistance pushes to the top. Market spiked up once, market spiked up twice, market spiked up 3 times, market spiked up 4. That's already 5 pushes to that top, so majority of times that's capped, but it's only capped if market coming down in bearish candles, and then that'll be 5 pushes to that top. But we are on that 4th candle still, because market still pushing. It has to drop back down for that 5th leg, and that'll be 5 pushes to the top. We got to see some bearish candles that has to form in this area for that market to be 5 pushes to the top and push down. If not, market's going to be respected for support for that 1st, 2nd, 3rd, 4th retest, 1, retest 2, retest 3, retest 4, retest 5. So that's already exhaustion. So there's no need to keep on reading that. You just got to wait for the pattern to fully break out. But it looks like it's coming from some type of incline. So it looks like it's respecting from this area here. Okay, but I'm not too sure. We identify as we walk down further, but it looks like it's headed from, it's coming from this area near this green wick. So trying to clean off this screen, we're going to head over to the 3-hour time frame. Okay, simple price action, just spiked that area multiple times at that high, near price, the last 3 candles overall of that area. As we look at it, market is spiked that area 3 times, so it's a triple top that can push that market down. Now, if it doesn't push down, we can see that market's going to come up for the 1st leg, 2nd leg, 3rd leg, push up for that 4th. We see that we have that market ranging at that high, so we need to see a candle break out, a body candle break out above. I'd rather just clear all these wicks, okay? And we'll see how the candles looks when they start breaking these wicks, and we compare it to the other side to see if it's going to be a nice breakout. If not, we just got to wait around a little longer. Head down to a 2-hour time frame. 3-hour, 2-hour, identifying the same thing. 3 hours, 3 pushes to the top. 4 hours, 2 hours is 4 pushes to that top of that area next to price. Headed down to 1 hour. Now we see a break and retest of that 1 hour break and retest. Second last candle is a doji. Price action is engulfing the second last candle, and the 3rd last candle, and the 4th last candle, and the previous candles, all the bodies. So the only one that didn't break and is having a hard time breaking is this body candle over here. So price breaks above this, we look for a break and retest as we walk down further. That's why we just added SR line for resistance, so we can see price acting currently sitting on our resistance line. 1 hour, 45-minute time frames identifying the same thing. Head down to the 30, identifying the same thing, but it's a bigger candle. Head down to the 15. We got 3 pushes from that area below price, so we can see that market did engulf with the 3rd to last candle. It did not engulf the 3rd to last candle. It engulfed the body, but it didn't engulf the full candle. Second last candle engulfed that doji that we wanted to engulf, that pushed that market up further. So we can see that market on the 15 minutes is on the break. So we should be looking for a retest as we walk down further, headed down to the 5-minute. Okay, that's a retest candle, the doji, but it's not bearish. So that market can still push up in green. But we look for that bearish candle. So here we go. Got the retest, but market still didn't come down for a retest. It's just a retest candle that's sitting up here at this high consolidation, working its way sideways. So we want to see that market come back down a little bit, attack that support above price. We can see a market is doing some type of triple top, to be dropping down. Okay, guys, this is Cam Jones, FX Daily Analysis. Thank you for watching, and thank you for your attention. SLB stock.